In just the last few months, PayPal's stock price has fallen by over 30%, and the majority of this move down came after they announced their Q4 2024 earnings and provided poor guidance for 2025. And with the company set to announce their Q1 earnings on April 29th, investors are starting to wonder what the company will put forward. So that is exactly what we are going to be looking at in today's video. We are going to take a look at PayPal's previous earnings reports in Q4. We're going to look forward on what analysts and the company is expecting for Q1 of 2025, and then we'll leave off by giving my opinion on where I think PayPal is headed in the future. So if you enjoyed this video, make sure to go down below the video and drop a like. It really helps the channel out and I greatly appreciate it. And while you're down there, if you like the video and you want to see more videos like this one, make sure to subscribe. Thank you guys for watching. So as I mentioned in the intro, PayPal's stock price is now down by over 30%. The stock just a few months ago was trading at over $90 per share. That means right now, if the stock were to run up back to $90, that would be a potential upside of 50%. And right now at $62 per share, the stock is much closer to its 5-year low of around $50 per share than it is even to this $90 high that we've seen in the last year. Over the last 5 years, however, PayPal at one point traded at over $300 per share. It is far below that level. However, a lot has changed since 2021. And the majority of that change has came around PayPal's growth projections. Back in 2021, they put up a quarter of top line growth sitting at 30% year over year. However, today their top line is growing by less than 5%. And this lack of top line growth was very apparent in their most recent earnings. Here we're looking at a slide from their Q4 2024 earnings report, and they showed revenue of only $8.3 billion in the quarter, up 4% year over year. And even on the full year for 2024, they reported $31.8 billion, which was growth of 7% year over year. And with relatively weak top line growth, the company has shifted their focus to strengthening their bottom line. Non-GAAP EPS numbers in the quarter only grew 5%. However, year over year for fiscal year 24, they saw their non-GAAP EPS grow by 21% to $4.65. And overall, this has helped their EPS numbers get back to levels similar to those in 2021. At the peak of 2021, they saw GAAP EPS hit $4.39. Today, that number is sitting at $3.99. However, it has been on a nice uptrend ever since 2022. And of course, bottom line growth for a company is great to see. However, when investors are putting a valuation on a company, they are typically looking at top line growth numbers. And with weak revenue growth, they are very concerned about where this company is headed, especially when you look behind the scenes and see that their active accounts have basically been stagnant over the last couple of years, sitting at 434 million users, up only 2% year over year. And in PayPal's Q1 25 and fiscal year 25 guidance, they continue to show a strong focus on bottom line growth. For GAAP EPS in the first quarter, they are expecting somewhere between $1.11 and $1.13, which is up from 83 cents in Q1 of 2024. And for the full year, they have a GAAP EPS estimate of $4.80 to $4.95, which again is up from $3.99 in fiscal year 24. And one of the ways the company plans to achieve this strong bottom line growth is by buying back a large number of shares. They are planning to spend $6 billion on buybacks. That is all of the free cash flow that they are expected to generate during the year. And this is not a new strategy for PayPal by any means, because they have been buying back a large number of their shares ever since 2021. In 2021, they had around 1.2 billion shares outstanding. They have since reduced that number down to around 1.04 billion shares. And over the course of the last year and a half, they have been decreasing their shares outstanding by anywhere from 5 to 7% year over year. And here's the thing, the company could even accelerate some of these buybacks because they still have $4.86 billion remaining on their previous buyback authorization from December 31st of 2024. And the board of directors actually just approved another 15 $14 billion for their share repurchase program. And keep in mind that PayPal right now has a market cap of $61.6 billion. That means with a buyback program of around $20 billion currently, they could buy back over 30% of their shares outstanding. At the end of the day, PayPal is not going to spend $20 billion on buybacks in a single year, especially because their cash and cash equivalents is only sitting at $10.8 billion as of December of 2024. So that means even if they bring in $6 billion of free cash flow, they would really only have around $16 to $17 billion of cash to spend on buybacks if they really wanted to. What I think is a lot more likely is they will just continue spending all of the cash that they are bringing in on buybacks each quarter. That way, if any acquisitions or large investments come up that PayPal needs to make, they'll still have cash sitting on the sidelines. And with $6 billion being invested into buybacks, they could still reduce their shares outstanding by almost 10% each year. So right now, PayPal is set to announce their earnings on April 29th, and analysts have an average EPS estimate of $1.16, so right in line with the company's guidance that they previously provided, and they're projecting revenue of $7.84 billion. And this top line revenue number of $7.84 billion is really where their opportunity presents itself, because this would only be growth of 1.8% year over year. If they come through with a top line number that beats analyst expectations and shows growth of 4, maybe 5%, I think that could be a big catalyst for the stock, especially when you consider that year projections for 2025 only have growth of 3.7%. It really isn't until 2026 that they start seeing a little bit more growth, coming in at 6.5%. And if PayPal comes through and puts up stronger than expected bottom line numbers, that could have a huge impact on the stock price, because what it could ultimately lead to is better valuations for the company, because right now their forward P ratio is sitting at 12.52, and this is solely due to the fact that the company is growing so slowly. If we see their growth accelerate, let's say 5-10%, that could easily lead to their valuation getting a lot closer to potentially a 20 forward PE ratio. And things start getting very exciting if they couple strong top line growth with very strong bottom line growth. Right now for 2025, analysts are expecting $5.01 of non-GAAP EPS. That would be up around 7.7% from $4.65 in 2024. And then they're expecting that growth to accelerate in 2026, growing 11.4% to $5.58. In my opinion, I really like how PayPal has positioned their business. I think they've focused on profitability, and that has been great in the short term. But in the long term, what I think they are shifting their focus to is being a lot more merchant focused. What that means is they are trying to provide services to their merchant customers that actually benefit their business. They are a lot less focused on the individuals and trying to grow their active accounts. Instead, they want to start getting into a lot more merchants and providing those merchants with value add services and then charging them for those services that they are providing. And I think in the long term, this is going to prove to be a lot better strategy. But keep in mind, I do own shares of PayPal. This is the YouTube portfolio, and right now it has a total value of $56,800.81, down quite a bit from its all-time highs achieved back in February of just over $66,000. And within this portfolio, I do hold shares of PayPal. I only have 10. However, in my larger portfolio, I hold around $16,000 of this company. I also have Google, Supermicrocomputer, Microsoft, Visa, AMD, SoFi, Alibaba, Palantir, and Apple. And honestly, I would love to see the stock market fall even further because I'm sitting on a large pile of cash. I have almost $25,000 of cash that I want to deploy into individual stocks. However, recently I just haven't pulled the trigger because I haven't seen a whole lot of companies that have been severely undervalued. My most recent ads have been into Google, and I've built that position into the largest in this portfolio, now just over $10,000. But remember, like I always say, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well well as your time horizon. I hope you enjoyed the video. If you did, remember to drop a like down below and subscribe for more videos like this one. And as always, guys, have a wonderful rest of your day. And for the joke of the day, why did the cow go to Hollywood? Check the comments down below for the answer. Thanks for watching.